Hello and welcome everyone to our weekly market review. As you can see that I have modified the setup a little bit. Instead of using Ichimoku Cloud, I have used the moving averages, which is slightly easier to understand since the cloud system is a little bit difficult. I have used 13, 21, 89 and 144 moving average. These are Fibonacci numbers, that's why I've used them. You can pretty much use anything like 11, 20, 20 50, 200. Use any combination. Just make sure two are short term and two are a little bit longer term. So let's get to the business. We'll start with S&P 500, which is US market. Last week we discussed that it has formed a bearish engulf and price have slipped below it. So by the rule of candlestick pattern, the target should be somewhere around these levels 4351, and we can see that market did touch that level. So it is for short term, it is a little bit bearish. It might take some support towards 4280 and start its movement upside. As of now, there is no signs that it will start again, but this is definitely not a downtrend. Markets is still an uptrend. This is just a healthy correction. Next, I've decided to add Bitcoin in our review every week. So in Bitcoin, if you see, market did try to change the trend. These larger moving averages of 144 and 89 have turned flat. This zone, it took the resistance at 31,789, and the support would be 24,314. This zone is very important. If Bitcoin breaks out of the zone, we may start seeing the further upsides towards 37,700 and beyond. Otherwise, do not enter into this thing. Next on our chart is silver. Silver, if you see, if I zoom out a little bit, you'll see that this stock, the silver, has actually tried to do an all-time breakout, an all-time high breakout, and it failed miserably. So this is a breakout failure that we are having on our hands right now. What is important is for futures to hold these levels, this support zone. If it gets broken, if it slips below 67515, the trend might actually reverse towards the downside. So it's a very important make or break level. There is a trend line support and there is structural support, everything is there. We might see a short bounce back. So silver is in a make or break situation, no clear trend as of now. Gold, on the other hand, is pretty much long. Its all-time high breakout is done. Its support stands at 56,900. Prices are slipping a little. It is not at all a downtrend. Prices are just slowing down. There is a consolidation. It is definitely not a going towards the upside also. So there is no rush towards either side. It is in a consolidation phase. I've decided to not really focus a lot on US yield and dollar rate, yen, these things. So I'll just skip them. Now comes Nifty index. So the support stands at 18,696, and this is nothing but a very small correction in a larger uptrend. So like really nothing to worry about. It might take a support either from this EMA or this zone anywhere. As of now, no signs that it is going to bounce back. It may, but there are no signs as of now. So it's flat. Now Nifty Junior, which is Nifty Next 50, if you see, it has again for the second time failed to cross the all-time high area, and it is moving down. Hopefully it might take some support at these moving averages and might start going up again. But for now it is going down. We can see mid cap is comparatively much stronger, but it is also in this overbought area, which does not mean that it is going to fall. see, it has been in overbought area since a long, like since few weeks. Definitely outperforming the index. If you see RS is a number which shows outperformance relative to Nifty. If the latest value is above zero, the particular index or stock is outperforming Nifty for last 26 weeks. I'm using 26 weeks because a year is of 52 weeks, and therefore I'm using 26, that it is outperforming since 6 months. That's my logic behind using 26 over there. Same goes with small cap index. Again, amazing outperformance relative to Nifty, and it is looking strong, no signs of weakness. Now we get to everyone's favorite, Bank Nifty. And what we see over here is that there has been some correction. Markets are testing these levels. What we would see is this: market is exactly at the support level. It might give a bounce back from here. So this is very important zone for Bank Nifty. It has been relatively underperforming Nifty since last few weeks. So this would be interesting to watch. For financial services, again, right at the support zone, the indexes might give a short bounce back, but there are no signs of buy in this for the next week. Nifty IT, as we discussed previously, this level 31104 is very important. If this level breaks on the upside, this is going to be an amazing thing. You can actually buy IT based mutual funds, you can buy IT stocks, and this might lead the next leg of upside for the index. Nifty Pharma, on the other hand, it has broken above the all-time highs, and it has formed this year. Last week we discussed there is this pin bar kind of formation which will lead to consolidation, and that's what is happening right now. So, yeah, it's just consolidating. Auto, if we see, fair bit of consolidation, breakout supports are far away. There is this small consolidation. It might take some supports at this EMA. It has formed a pin bar, which is interesting. So if this high is crossed, it might retest the previous highs. It might retest the previous highs if this high is crossed. So try and find some stocks in auto sector for the next week. PSU Bank at a very important make or break junction. If this breakout happens, well, the rally is going to continue. The party is going to continue in PSU stocks, PSU banks. Sorry. So just be careful at this level. Breakout of this small consolidation right over here. This might give amazing opportunity to add up more on the PSU bank stocks. FMCG, just like most other indexes, a healthy bit of correction at this moving average. It has formed a pin bar over here, also might go up. There are not much of signs of bullishness as such. So this might be another pullback kind of trade, FMCG and auto. Metal, if you see, as we discussed last time, this is not something that you buy at the breakout. So metals did struggle at its all-time highs. The zone, it is causing some problem and it is slipping down a little. RSI is below its moving average. I've used 4 period moving average, very for short-term momentum. It it is like it might fall a little bit more. This is definitely not a place where you would like to add a lot of metal stocks for sure. Energy, again, if we see, it has broken the trend line. Now it would be very interesting. It is consolidating after breaking the trend line. It is not immediately reversing, so that is a good sign. If this breaks out above this high of 26,900 or 27,000, it would be a good place to do some buying in the energy stocks. So yeah, this could be another sector along with IT which drives the further rally in index. Next leg of the rally in index. Nifty reality, just like auto and FMCG index, it is giving this pin bar, but the problem over here is it is another all-time high breakout rejection, which is at on our cards. Hopefully, it gives again another a chance to buy, but as of now, no, not much of signs. Media, we discussed last week. There is a breakout, and this is a place where you should look for stocks, media stocks. Now we go to infra, very much towards the overbought zone. There is this consolidation, RSI slipping below the average. This is typical for the consolidating market that we are in right now. Private bank again slipping. It has closed below the average also. It might go towards this level 22,105. This is not a place to go either short or long for a short term trade. Oil and gas, there is this consolidation at this resistance level. Breakout would be important. Break of this consolidation, or this might just fuel the next leg towards the downside. So be careful over here. This breakout does not look that convincing to me. Healthcare, just like pharma, formed a pin bar last week. This week is giving consolidation. No need to worry if you are holding the stocks. Consumer durable, yet another sector which is giving a breakout. The trend line breakout, the previous swing highs breaking out after the small consolidation. This is a place to look for buying stocks for upcoming weeks. RS is also positive, so it is outperforming index. Now coming to the stocks that I find interesting for next week. One is Imami. It has got the trend line breakout. It has got the previous swing high breakout. There is the small candle over here. It might move higher towards what 600 some level. Yeah, 605 level. So that's Imami for you. These stocks that I discuss, uh, Imami is a stock that I'm not buying. It is just one of the I trade ideas. You can see the stop loss for the breakout candle is too deep. That's why I won't be buying this. But this is an interesting stock if you are trying to build a long term portfolio or something like that. Latent View is a stock that I have personally bought Friday evening at this almost at the same price. It is a very long consolidation breakout and RSS turned positive. I am looking forward for some good move on this personally. Another stock that I bought on the weekend is this Swain Pharma. It has given this rounding bottom type of breakout, decent continuation pattern, which is RS is exactly at zero. It is a bit riskier. It's not fulfilling all the criteria. It's a bit riskier. So let's see how this works going forward. So that's it for the weekend summary. Thank you very much and see you all next week.